few months ago, after I think I lost a few accounts with you guys, I decided to sit down and really look back at my trades and do some kind of backtesting with what I was trying to trade. I went out there and purchased data from these data brokerage companies and pretty much went through day by day, going back 5 years, how high they've gone during the day, what percentage, and when they come back down, how far down they went, that kind of stuff. And I like to think that I found an edge with the way I'm trading.
Welcome everybody to another funded trader of TradethePool. Today, Jimmy is with me, a new funded trader trading with $200,000 of buying power, our Flex program. How are you doing, buddy? Thanks for coming.
Thank you, Michael. Thank you for having me.
Happy to have you here. Jimmy, let's talk a little bit. Let's start with the beginning of your journey with TradethePool. Tell us a little bit about that.
Well, it's been a few months, almost a year, since I first joined TradethePool. I was looking for a more affordable way of, testing trading strategies out there for equities. Okay. And I must say that you're probably the only one that I came across for my particular instrument of trading choice, which is equities and penny stocks in particular.
Yeah. So definitely that's something that on one end we like to be the one and only who does that, but on the other end, we are waiting for more competitors to come to help the industry to grow. But I'm happy that you found us, and especially for those small caps penny stocks, we are definitely the home for that. Tell us a little bit about your background. How long ago you started to trade?
I've been exposed to trading, I want to say, long time ago, back in 2010, when I first had that, itching desire to want to learn how to trade. But I want to say that I never found a trading edge with the different strategies that I've tried. I want to say until now. I've tried a lot of things. I've traded futures, I've traded options, I've traded large cap stocks, I've traded everything under the sun. But and also one more thing is I've joined all these different trading rooms, like services, these individuals that you see online, but I've never, sat down and determined that I had an edge with my trading strategy. Because you win some, you lose some, but how do you know you have an edge, Until I think now, a few months ago, after I think I lost a few accounts with you guys, I decided to sit down and really look back at my trades and do some kind of backtesting with what I was trying to trade. And I like to think that I found an edge with the way I'm trading, because I went out there and purchased data from these data brokerage companies.
Okay.
And pretty much went through day by day, going back 5 years. 5 years of trading, and identified all of the top percentage gainers and cataloged in an Excel sheet how they behaved during the day, how high they've gone during the day, what percentage, and when they come back down, how far down they went, that kind of stuff. And that's what gave me the edge, the confidence to think, let me give it another try and see. And luckily, this last attempt, it did go through. And funny enough, the metrics are pretty much exactly the same, between my funded account, the one that I passed,
okay,
and not funded account, but the evaluation account that I passed, and the 5 year of backtesting, the win percentage within 1% accuracy. On the backtesting, it was about 63% win rate, 1-to-1, and here it's 62.5.
Wow.
Yeah.
And do you remember the moment when you said to yourself, okay, I gotta go back and test it and go and find the 5 years data and really analyze it? What got you to the point where you want to say, okay, I need to find my edge, right?
It's so many occasions of losing. We're having losing trades and blowing my accounts. That's what led me to want to sit down and rethink my strategy. and I've come across also, online, a few individuals that have shared on YouTube the idea of backtesting, but I
Hmm.
never really sat down and thought about doing it myself. And I was like, why not give it a try? And I didn't know how to start, or where to start, but I went on YouTube and Google and searched and searched. You, I'm pretty sure if you looked online, you're gonna find different ideas how to do the back testing, and just do one of those. One of those for me was to go to these online, websites that sell data, trading data for the for however long you want, and then give it a test. And it takes time. I want to say, because I must say it probably took me 3 4 months, because I have a full time job, right? So it took me probably 3 4 months to download all these CVS, like Excel sheets, format data. And every day we have like 12,000 stocks trading times 250 days a year times 5 years.
That's a lot. Yeah.
That's a
I like
lot of
that.
data. That's a lot of data. And I got to the point where I almost gave up. And luckily, I have some background in, I'm not like a coding, like writing codes, but I
Yeah.
have a pretty good understanding of how it works. So I was leveraging ChatGPT,
Okay.
right, to generate a script that I could run on my computer to execute these different Excel commands, right, for me while I was away from the computer.
Huh.
So I would just download the spreadsheets, put them in one folder, and then get the code from ChatGPT, and then run Python to generate the script, and then just run the script, and it will have the mouse move around and click here, click here, click here,
Wow.
run, and let it run for like literally 3 4 5 days straight. And then at the end, I'll have my short list of the spikers of that same month or 6 months period,
Yeah.
copy it over, and then do my analysis. And that's how I went with. That's how I came to shortlisting. That's how I got to my short list of about 3,000 spikers for the past 5 years.
That's incredible. First of all, if you have the data and you want to share it on Discord, for example, on our community, that will be highly appreciated from our traders side for sure. It's interesting. A few things that you mentioned here that are very interesting. One is the fact that because you had so many losers, then that was the turning point that got you to the point that you want to dive in a little bit more and actually find that edge. So a lot of the times, and this is incredible to you, because a lot of the times those opportunities, we know it from the markets, right? When the
Right,
market is dripping down, falling like crazy, 2020, 2008, 2016, whatever, every time we have a crisis, that's actually on the other side, it will be the opportunity to buy the dip, right? And it's the same
right,
thing that you did on that level. You had fallen in your stock, right? Your stocks fell, and then you find the opportunity instead of giving up. And that's the second thing. Instead of giving up, you actually took that opportunity and made it something much bigger, passing the evaluation, getting to the funded state. And I'm sure we'll see a lot from you in the future as well. So it's incredible to see that the way you cope with that, right? Some traders will say, okay, it's not for me. Others, like you, will say, I'm going to go all in and figure it out. And yeah, that's incredible to hear and see the performance as well. Jimmy, I'm going to share my screen and show the guys at home your chart. Really
hmm
incredible. Let me do that, and we'll talk a little bit about your stats as well. As you mentioned, you're very much into that. So, for those of you not familiar, every trader gets his own dashboard. The dashboard will show you your stats, the risk parameters, and you can really understand your progress and look at your equity curve. You can also check your achievements and payouts and customize your view, switch between light mode and dark mode. Flex 200, meaning $200,000 of buying power, which is a lot, right? Before, Jimmy, before you traded with us, Traded Pool, you traded on your own capital, right?
correct. Yeah, multiple times. And I blew
Same size?
no different sizes over the years. Yeah,
Okay. So Would you say that $200,000 is too much or too little? It's
It's
enough.
perfect. It's enough. It's more than enough. It's more than what I need, really, to be honest with you. But it's
Okay.
perfect. It's perfect.
Amazing. 12,000, it's the target you needed to reach in order to pass. You have a max of 8K, daily pulse of 4K. The daily pulse, it means that once you lose that 4K of that day, you're done for that day and you can come back the next day. The consistency rules, minimum trades. Of course, when you join Trade the Pool, go over the rules, the FAQs, and then you have your chart, your balance. And it's interesting to see, you started kind of sideways, a little bit up, a little bit down, and then after a few, like a month and a half, then you started to find really a success. Tell me a little bit about that shift between, going sideways for a long time and then bouncing up.
Well, to be honest with you, at this point, with my what I believe is found strategy, I'm less discretionary and more systematic.
Hmm.
So meaning I could care less about the outcome of individual trades, right? And I know that I'm going to have streaks of losing trades by nature,
Yeah.
especially with my win percentage of 62%.
Yeah.
Actually, there is a chart that one could look up online of how many losing trades you could have in a
Mm.
row, given a percentage of
Okay.
winning trades, right?
Yeah.
And I know that with my percentage of 62%, it's possible to have 6, 7, 8 trades in a row that are losing trades.
Okay.
So given that, I know that those are going to come, and I just need to keep executing on my strategy. And one day, one time, it's going to happen that it's going to break out and keep going. If this strategy is still active, I guess, in the markets, if I could say,
Hmm.
or winning, if it's still a winning strategy out there in the market.
Yeah, that's a great way to put it on the mindset level. When you know that you have enough high success rate, then you're okay with the fact that you will have a few losing trades because looking at the bigger picture, the overall should be to your favor, right?
Right,
And risk reward is a one-on-one, so that's something definitely to pay attention to.
right.
I'm guessing even with the 62%, I would go to the 1.5, trying to reach that at least 1.5 to give yourself a little bit more depth there. And looking at this on the stats on the right side here, so you can see the best trade, the biggest loss, which is great. Your biggest trade, your best trade is 2200. The loss is only 700. Average win and loss as well, number of trades. And funny to see, I'm looking at the long trades comparing to the short, and all of your 112 trades are all on the short side, right?
That's right.
Tell us a little bit about that. Obviously, we have many traders that doing that, small caps
Yeah,
that shorting penny stocks, right, or small caps. But from time to time, I do see long trades as well. On your case, it's
right.
100% short.
Well, to be honest with you, is that the reason behind this is I had a like a hypothesis that as we know that these small caps, most of them are companies that don't have enough cash, you know,
Mm.
meaning majority of them, they're just literally pumping the stock on the day, hoping that the crowd could join in, and then they will dump these shares that they have on the market in order to raise capital so they could stay solvent in a way, right, to
Mm.
keep up with their operations.
True.
So to me, that's something you could exploit, unlike if you wanted to trade, say, Nvidia, a multi-billion-dollar company that has all cash they want, right? Right off the bat, when you're starting the trading, you don't have a directional edge or catalyst that's behind you pushing the stock in a direction that you think it should go, right? That's my number one reason. And number two reason is the fact that they're volatile. They have the volatility behind them.
Yeah.
It's not uncommon to see a penny stock go from, say, $1 or $2 to 4, 5, 6, 7 in a
Yeah,
day,
yeah.
and then come back down at the end of the day. You know.
Just the other day, we had Beyond Meat, BYND, went from $1 to 7, I guess it
Yeah.
was. And all of a sudden, that was pre market, 8 at the top, I guess. And
Right.
that was pre market. Once the market started, collapsed back to 2 or so.
Right.
Yeah.
So yeah, my back testing really showed me that on the long side, I didn't find anything. You know, if you ask me, on the downside, so meaning shorting, that's where I found my edge in the data.
And what's when you're saying found your edge? Tell me a little bit more about that. Let's dive in. I'm sure the guys that listen in right now really want to understand that because many of them are traders that trade penny stocks. What is it that you found that the certain points when you can get in, or how to manage the trade, the risk management around it?
I don't know how much I'm gonna share because this penny stock market is very small, right? And I believe in erosion. If you ask me, especially small market like this. But what I found is that once I found those stocks that spiked for the past 5 years, it was just a matter of finding my entry point. At what point do I enter short? Is it at the open of the market? Is it after a certain amount of time? Is it after a certain percentage of spike? Is it all these different things, right?
Okay.
And then, so that was one. And then number two, how long do I hold my trade? Is it, after 30% drop or
Hmm.
50% drop or all these different parameters? You just model, you run these Excel sheets and then see where you have the biggest P&L, if I could say. And then also when it came to stops, managing my risk, you also do the same. You try, what if you don't put in a stop loss? What do you get, right? What if you put in a certain percentage stop loss? What if you put in whatever you come up, you can think of, you just put in that stop and then run your trades and see, how your P&L goes, right? So with my particular strategy, I found that the one that I kind of liked, which is the one I'm going with right now, is I set my stop loss to about 500 to 750, depending on how my bankroll is standing, to be my max stop, right? $500 to 750, and then I let it run, and close it at the end of the day. That's where I found the most profit, if I could say.
Yeah, I can definitely relate to that because a lot of the times when I'm doing this with other funded traders, I do see that they're closing their position too fast. They know it, closing the position too fast. This is why my tip is always keep 10%, 20% of the total shares and let it run. You might see that at the end of the day, as you mentioned right now, at the end of the day, you will have much more in a lot of the cases. So by doing that, you're also teaching your brain that it works and I should leave it to run. And
Right.
second, you have data, as you mentioned, you gather the data. You're not just going back and see, did it happen or not? You had the position in, so you can actually track it more easily and see that it works for you. So 100% keeping some of the position in most cases will give you more, especially when it comes to fading those small caps, for sure.
Right. Right.
Amazing, Jimmy. That was full of insights. I'm sure the guys that just listened really enjoyed it. Are you on our Discord? Are you active?
Not yet. Not yet.
Okay. Let's start doing that. I'm sure the guys that share a little bit something that you can and feel okay with about backtesting and the reason to do so. I'm sure the guys will love it, and you will have a great brainstorming together with the other active traders. For those of you guys who want to check us out, go to tradethepool.com, and maybe you will be the next one in the interview. Thanks again, Jimmy, for that, and we'll be in touch in the future. Take care, guys. Bye-bye.
Thank you, Michael. Bye-bye.